with us. Rudra, hi, afternoon. Good to have you on the show. Any short trades that you would have, Rudra, on your list? Or do you think the market would stabilize sometime around?
No, definitely not. Bank Nifty has already given a breakdown much before Nifty, and Nifty, it is just a matter of time. The recent close of 23,200, 23,300 will be tested in a day's time, but definitely weakness is much more seen in financials. And I'll pick up only short trade. For me, Adani Enterprises looks weak on chart. One can definitely take a positional sell call on future. I'm looking at initial targets of 2,340 with a stop loss of 2,415. And similarly for me, banks are a very weak area and one can make a choice. Look at either PSU banks or even private bank, but I will rather sell weaker banks than selling stronger one. So for me, it is either a choice between Bandhan Bank, RBL Bank. These are all stocks which are definitely good to short on any rise. So for me, RBL Bank is a sell. One can look at shorting this in futures for a target of 151 with a stop loss of 157. So bulls remain only in IT as a sector, and those who want to buy the dip, wait for some more time, let the panic and the leverage get out of market, and much lower levels are awaiting to buy.
Okay, point taken. So that's the view coming in as far as the market setup is concerned. But just taking stock of some of the big movers at this point of time, in terms of the gains that we are witnessing, Bharat Dynamics is perked up a bit. Paytm is recovering from the lows. Vijay Diagnostic has been also doing okay. Z Entertainment is slightly coming under pressure, and then of course there are some of the other stocks that one really needs to watch out for as well. See, Rudramurthy, what's the take on Ramkrishna Forgings as a stock? It's up around 7.5%. And the other one that I wanted to discuss with you is also IRCTC, that Macquarie Initiation is lending some support to that stock.
See, when it comes to Ramkrishna Forging, strong support for this stock emerges closer to that 880-900 zone. From there, where you're seeing the bounce. In fact, today's bounce has been supported with volumes also, which is very good. So definitely, I will be a buyer at current market price, and on any dips to 930, 940 zone, I will buy RK Forging. Keep a stop loss of around 890, and look at targets of the recent highs which it has made, which is at around 1050, 1060 level, and post that still further move towards the 1150, 1200 can be seen in Ramkrishna. Also, IRCTC is another stock which is definitely holding strong in this weak market. But if you see, the selling on this stock has emerged from those levels of 1130. From there, it has been a relentless selling irrespective of market, and now there is some amount of bottoming out seen at levels closer to 750, 760. So with a stop loss of 750, one can buy IRCTC also. Look at initial targets of around 850 to come, but this is more a bounce kind of a buy on IRCTC. RK Forging is much better.
About Shriram Finance and IndusInd Bank, would you be a buyer at lower levels, or at what level does it become a buy?
See, first a word on IndusInd Bank. Last quarter results were definitely bad when the entire banking sector as such was doing good. And it has broken all the crucial supports also, and the final one being now at around 925, 930. So if it breaks this level of 925, 930, which is very crucial, we might see further lower levels which can be at 860 or even closer to that 800, 810 zone. So definitely an avoid, and I will not buy IndusInd Bank at current level. Wait for lower levels, see how this quarter results will come, and then take a call. And when it comes to Shriram Finance, again, this is another stock. Once it got added into the inclusion of index, and then it was performing. But if you see last 1 to 2 quarter, it has been consolidating again in this range of around 3,500, 600 on the upside, and on the bottom, it is just taking support at around 2,700, 2,750. But however, if you see today's volume action and the price moving down, definitely again this is another stock which is showing some amount of weakness. If you want to buy this stock, wait for lower levels, might be levels closer to the 2,500 or even much lower. One can look at buying Shriram Finance. So definitely an avoid for both IndusInd Bank and Shriram Finance at current market price.
As that and Shriram Finance and the kind of selling that one is seeing over there right now. It's pretty much the usual suspects. There's Tata Elxsi, of course, which is facing quite the bit of heat. That stock down about 7.25%. REC, like we've been pointing out, a 7% decline there. Kalyan Jewelers down about almost 6%. BHEL, Naveen Fluorine, Paytm down 5.5% or so. Nishal, a fair chunk of the market has corrected quite a fair bit, right, in the last 52 weeks. Anywhere where you think that the selling could be overdone and the stocks could be in value zone, either a sector or any theme that you may be looking out for once the earnings season is out of the way, you would take a call, or even now you feel that they're much in value zone, price-wise?
So, Aisha, I've been wrong on the banking side. Now, for 2 quarters, I've been saying basically that they are in value zone, and it just keeps on becoming more value. So, I think there is one sector basically which is really in a value zone is the banking. But unfortunately, you keep on seeing that the pressure on the banking side just keeps on growing. Definitely on the private sector side, I think the large banks are in deep value now. By any historical standard of valuation. I think whether it is HDFC Bank, ICICI, Axis, all of them are a good value at these prices. So if you are really looking for value and you have an outlook of more than a year, I think this should be a good time to actually accumulate. The other sector which I have started liking at the moment, I think, is the FMCG, the staples part, basically. I think there also, I think the value has started emerging. We are seeing a good monsoon has gone there, gone past, and I think with the elections out of the way, government spending is going to get ramped up in the next 2 quarters. So I think that distribution of money also is going to happen. So rural side staple should do well. So both the FMCG staples and banking, I think these are 2 good places basically where there is real value.
Clearly, banking is in a value zone and a lot of select names as well. But consumption too, at least yesterday, was doing quite well when the rest of the market was weak. FMCG was doing well, and that was led by perhaps some sort of enthusiasm coming in from Avenue's numbers as well, because they had come out with a provisional update earlier that 17.5% growth had got the street excited. But what about the margin performance and what you should expect from other internals? My colleague Snehi is joining us with the assessment as to what we should expect from Q3 performance come tomorrow.
Well, yes, so a decent quarter is what we can expect this time coming in from Avenue Supermarts. Revenue is expected according to the lines of what they had given in their Q3 update, roughly at around 15,500 crore rupees, which is an uptick of 17.5% year on year. EBITDA we are seeing at 1,300 crore rupees versus 1,121 crores, so it's an uptick of 17.3% year on year. Net profit, now the bottom line we are seeing at 873 crores compared to 737 crores, which is also an uptick of 18.5%. And when it comes to the EBITDA margin figure, that we're seeing at 8.4% compared to 8.5% year on year. A slight bit of a decline is what we're expecting on the margins front, but not much to worry about over there. Here are some key expectations. Revenue is expected to grow at 17.5% year on year, driven by store expansion and higher discounts. That's something that has done well for the company in this quarter. Marginal improvement in the sale of general merchandise and consumer sentiment has improved overall, so that is also something that could help the top line in Q3. EBITDA margin, however, like I mentioned earlier, we're expecting a slight bit of a decline on that front due to the higher operating expenses led by store expansion and weak gross margins coming in. Some important factors to watch out will be the SSSG, which is the same store sales growth rate, the outlook on general merchandise as well as the apparel segment of the business, any commentary on the impact of e-commerce and quick commerce, if at all the company is seeing, and their expansion plans for FY25. Remember, in Q3, they've opened 10 new stores, which takes their new total to 387 stores as of now. So we'll be keeping a close eye on the management commentary on those lines as well. But well, yes, overall a decent quarter is what we are penciling in.
That's that on Avenue Supermarts and the expectation from the earnings this time. But Kunal, just want to take a look at some of these names from within banks. Nishal was just talking about as to how the large cap banks are the ones which continue to be in value zone. And we've often talked about HDFC Bank and ICICI Bank. Stack it up for us. Where is it that you think that the decline is still to go? And where is it that you would now be comfortable buying the decline?
So I would still be more of wait and watch on many of these large cap private sector banking names. HDFC Bank was one of the stronger ones till just about a few months back, where HDFC Bank and ICICI Bank were the only two stocks which were closing in towards their lifetime high levels. HDFC Bank managed to rise up by I think 100 odd points from its previous highs of 17, 80, 90 thereabouts. But then the moment that stock had started to get into a correction, the correction has intensified and it's been relatively more weaker as compared to its immediate peer ICICI Bank, where over the last say 1 month or so, HDFC Bank has corrected more than 10 to 15%, but ICICI Bank has corrected by a margin of less than 10% broadly. HDFC Bank has also come back sub its 200 moving average, or just about on the verge of doing that. ICICI Bank has managed to hold on to those levels broadly. But then the other private sector banking names, Kotak Bank, Axis Bank, IndusInd Bank, I think many of these stocks have been huge underperformers, and they continue to be more of laggards. Even the mid cap and the private sector banking names, the likes of Bank of Bandhan Bank as well as RBI Bank, IDFC First Bank, I think there are hardly any stocks which have actually shown signs of maybe resilience or some sort of an outperformance with respect to this market correction. I think that's one of the reasons why I would believe that maybe the entire sector would take some bit of more time to try and get its mojo back again. So far, as of now, ICICI Bank is the only one which is relatively stronger as compared to the other peers.
Okay, that's ICICI Bank right now in trade. But Rudra, what about the PSBs? I mean, that seems like a weaker trade right now. But do you sense that SBI could rebound from the 740 odd levels anytime soon? Are the charts indicating so?
Yeah, the last support for this stock is somewhere closer to that 730, 735 zone, and we are approaching those important strong support zone. So definitely from those higher levels from where SBI saw a clear fall from 860, where the resistance was, we have seen a relentless selling from 860 to current levels of 740. So if not a big bounce or a rebound, at least some support should emerge here and the fall has to stop. So closer to those levels of around 730, let us see whether SBI holds that last support which is there, and if yes, then only we can see some amount of rebound. And the same is visible even in PNB, or even for that matter Canara Bank. If you look at Punjab National Bank, yes, the support for this stock is more or less closer to those zones of 95, and we are again reaching close to that price from the current market price. And even for that matter Canara Bank, if you see, strong support for this stock is emerging closer to those levels of around 90, 91, and we are already there. So for me, these are very, very strong support zones. If we break down, then yes, further selling can be seen. So let us watch at this crucial level and then take a call.
Let's see which way it goes. But for now, let's take some BTST trades as well from our technical experts. Not sure if it's going to be STBT or BTST given the nature of the market. But Kunal, what have you picked out for us?
So one buy and one sell. The sell, of course, is on the financials, on the banking, on the financial services side. So we'll look out for Pinamal Enterprise as a shorting opportunity. The stock consistently breaking below its key support levels. Earlier, I had flagged off a target close to 1,000 levels. The stock has fallen below those points, so would revise the targets on the downside to 975. Traders could look at a fresh sell with a stop loss now till to 1020. On the buy side, Wipro could be interesting pick. The stock is holding on to that level of 300, and we've seen the stock over the last 1 week, 10 days, going through a correction of 10% from 330ish thereabouts. So I think at current levels, the risk reward could be attractive. Would suggest a buy with target of 310 initially, stop loss at 294.
Okay, that's a buy on Wipro and a sell on Piramal Enterprises. Rudra, what's on your BTST list?
Sell call. Bajaj Finance looks for me strong relatively, even in this weak market. Bajaj Finance is holding up, so I will be looking at buying Bajaj Finance, available even in futures, looking at targets of 7,350 with a stop loss of around 7,285. And a sell call on IndusInd Bank, very weak stock, and banking not at all doing well. So one can look at shorting IndusInd Bank, target of around 925 with a stop loss of 955.
Nishal, some of these underperformers.
If you like this video, then like, share and subscribe to ET Now.